Crypto family, welcome back to the channel. Aaron here from Bitcoin Bros coming back at you with another cryptocurrency video today. And as you guys can see here right in this clip, this is the current state of the market. $40,000 Bitcoin last month. Everybody was very bullish. Everybody was very hyped that the ETF was coming. They were saying we're gonna get all-time highs right after the ETF is passed. But now we're seeing a $40,000 Bitcoin. And people were very, very bearish because Bitcoin peaked at 48K. And when the ETF came out, the Bitcoin dropped all the way down to $40,000. People were expecting for Bitcoin to just basically reach all-time highs as soon as the ETF was passed. And a lot of people think that the Bitcoin ETF was actually unsuccessful because this did not happen, which is kind of far from reality. And I'll be talking about that in today's video. Also looking at some technical analysis, some on-chain data, and sharing a clip with you at the end of the video. So let's go ahead and jump into it here. You can see that both BlackRock and Fidelity have accumulated over $1 billion worth of Bitcoin in 1 week. This is the most successful ETF launch ever. And this trend is going to continue to the upside. We're going to continue to see clients of both Fidelity, BlackRock, and these other ETFs start to accumulate more and more of these Bitcoin ETFs, especially when the financial advisors start to tell their clients, hey, you should put some of your portfolio in Bitcoin, 1%, 2%, whatever they say. That's going to help more and more money flow into Bitcoin. BlackRock actually came out with an article and said the best allocation you could have of your portfolio into Bitcoin should be 88% of your portfolio. But realistically, people aren't going to do that. But this means that BlackRock will be selling Bitcoin and these ETFs to their clients. And you can see they've already started doing marketing. The GBTC here, you can see this is a grayscale Bitcoin ETF. They're marketing it to the public. But we're going to see this from Grayscale. We're going to see this from BlackRock, from Fidelity, and all the other institutions that are involved with selling these ETFs. And it's very interesting that this ETF gets passed and the price goes down, right? So it was a sell the news event, but people aren't realizing how much money could potentially flow into Bitcoin. You can currently see the market, the fear and greed index is neutral. We went from being in slight greed here, back when Bitcoin was at 48,000, back to neutral. People really aren't bullish. But the fact that the Bitcoin ETF was approved is still a huge accomplishment, and they're trading now. And it's going to take a couple of months for some of this money to flow into some of these ETFs. And there's already been a lot of money flowing into the ETFs. It's going to take a little bit longer to get more of the traditional finance folks caught up to speed with Bitcoin, why it's important and why they should have it in their portfolio. And then another thing to think about, there was a lot of early selling pressure from GBTC because there's a lot of people who bought Bitcoin at a premium or a discount, and they're trying to sell for either a loss or because they've made a lot of profit from buying Bitcoin at a discount. So there's been a lot of sell pressure from there, and I think that eventually will go away, and we'll start to see just more demand-based for all of these ETFs. I don't know how long it takes for the GBTC sell pressure to go away because there's a lot of Bitcoin that they hold, but I think eventually we'll start to see over the next couple of years just a lot more buying pressure going into these ETFs. Is not as much selling. And that's just my personal opinion. That is not financial advice or anything. And then this is a chart I want to take a look at. This is from Plan B. He says these are two of his favorite models, the 2019 stock to flow prediction and the 2022 market cycle detection. So whether you believe in stock to flow or not, this model here has been relatively decent. And you can see that we are still in that accumulation phase according to this model. And we could see Bitcoin go all the way up to just under $1 million. I mean, that's probably the $600,000 mark here in this next blow off top, which we're going to see in potentially 2025 or late 2024. So that means we could see Bitcoin go from 40K all the way up to 600,000. You know, me personally, I don't think we're going that high. I believe Bitcoin does break six figures. I don't think it's going to go to the $500,000 point this cycle. I think that's going to definitely take a little bit longer. But this is interesting. I mean, if this does play out this time, I mean, a lot of people, you guys are, People that watch this channel are going to be very, very happy with your returns over the next couple of years if we see this stock to flow model play out, like what Plan B is showing here at around $700,000 at a kind of median price for the next run for Bitcoin. And in the history of Bitcoin, selling right now would not be the thing to do. I mean, we're very, very close to the halving. We've been talking so much about this Bitcoin ETF that people are forgetting that the Bitcoin halving is less than 90 days away. That's coming very, very soon in April. And you probably should be at least hodling your Bitcoin for at least a year after the halving, because normally Bitcoin in the previous cycles has peaked around 15, 16, 17 months after the Bitcoin halving. When we get that supply shock, not as much Bitcoin coming out every single day, the price of Bitcoin has to go up for the miners to stay relevant, or some miners are going to have to get taken offline because they just aren't going to be profitable. So something to think about. Right now, you probably shouldn't be selling any Bitcoin. That's not financial advice, but if history is any indicator, right now would be a great time just to hodl. I mean, you can see right here, ahead of the Bitcoin halving, comparing cycles via the realized price, you can see where we're at and what we could do compared to the last cycles. So compared to cycle 3, which would be like the 2021 cycle when we had the $70,000 Bitcoin, we could see Bitcoin go from where we're at right now, around $40,000, up to somewhere around $200,000 to $300,000 at a peak, and then kind of just play around 100K there. If it's anything like the cycle before that, we're going to see Bitcoin go potentially up to 1.4 million. And then if the cycle before that, we could see Bitcoin go all the way up to $3 million. So this is why people aren't selling their Bitcoin right now. We know that halving's coming. We know Bitcoin does tend to go in a bull run after the halving. And then just want to show you one on-chain indicator here. The addresses with a non-zero balance of Bitcoin continue to hit a new all-time high. If we zoom in here a bit, we can see that it's currently at 51.8 million people, or addresses, not people, these are addresses with a non-zero balance of Bitcoin. So the network is continuing to grow, but as you can see right there, multiple people have addresses. I mean, you guys probably have at least 3, 4, 5, 6, even 10 addresses, Bitcoin addresses with, your Bitcoin that you have in it. I know me personally, I have more than just one. There's not that many people holding Bitcoin right now. When you look at the entire world, we have around 10 billion people in the entire world. Less than 50 million people hold Bitcoin. We're still very early. So something to take note of. And it's still hitting new all-time highs. And then I want to leave you guys with a clip why the Bitcoin ETF is so important and why we could really see some huge price gains over the next couple of years. Go ahead and like this video if you found any value. Let's go ahead and check out this clip here.
Because when you look at the data tells you that if you're a fiduciary, you need to have an allocation of Bitcoin in your client's portfolio. And so what do I mean by that? I'm gonna go back to January 2018. The Federal Reserve, the St. Louis Federal Reserve Bank, put out a white paper in January of 18 that said one of Bitcoin's best use cases is as a diversification tool. And what do they mean by that? They mean that by adding a small amount of Bitcoin to an investment portfolio, it diversifies it, it increases what's called the Sharpe ratio, which are the risk-adjusted returns. And by doing that, it's a benefit to your clients. And so, and most, like I said, financial advisors and RIAs, they're under a fiduciary responsibility to understand that. So if they haven't taken the time to actually dig into the research and understand why Bitcoin is beneficial for investment portfolios, like I said, they're under fiduciary responsibility to do that. And, it's very important to understand that adding a small amount of Bitcoin increases that Sharpe ratio, which is the job of financial advisors. They need to, make investments that increase the risk-adjusted returns. And it's not only the Federal Reserve that says that, it's also BlackRock. BlackRock came out with a report I think it was about 6 months ago, looking at the efficient frontier of how much Bitcoin you should have in your portfolio. And based on the efficient frontier, their number is 84%. The optimum amount of Bitcoin in an investment portfolio of Bitcoin stocks and bonds is Bitcoin 84% of the portfolio. So naturally, no one's going to do that, but you should consider allocating 1 to 2%. 0 is the wrong number.